Investment banking is maybe the most prestigious industry in high-level finance. In this video, we're going to look into what investment banks do, who are the biggest operators in the market, and how the future looks for the industry. Money raising has been a thing since humans started to walk, but in the modern perspective, investment banking dates back to the 17th century. Dutch East India Company was the first company to issue bonds and sell equity to raise funding for business ventures. Certain middleman operators were used in order to facilitate these transactions. These operators can be seen as the predecessors of modern investment banks. The organizations which are operating today have been growing through the 20th century and most opened their doors for business in the late 19th century. So, what do investment banks do? Investment banks offer different services related to financing and advisory. Investment banks are typically known for their highly educated and deeply screened staff who have a reputation as intelligent professionals. Investment banks help companies in mergers and acquisition transactions and raising debt and equity-based capital. In practice, an investment bank is a middleman between financiers and businesses in need of funding. In comparison to full-service banks, investment bank services are more limited. However, the largest investment bank operators also operate as full-service banks and offer a large variety of different financial services for a broad customer base. An example transaction for an investment bank could be an IPO, advising and underwriting. In IPO, which stands for Initial Public Offering, the company is raising equity capital and listing its stock on the public marketplace, such as New York Stock Exchange or Nasdaq. When IPO planning starts, the company hires an investment bank to value the business, find the right investors to buy shares from IPO, and help the company in practicalities with the stock exchange listing. Investment banks also utilize other professionals in IPO process, such as auditors and lawyers. Advisor role for investment bank means that they work as a middleman in order to facilitate the transaction, and in this IPO example, the listing of the company stock. Typical goals for the IPO from the perspective of the listed company are to raise capital to finance future growth, get liquidity for the company stock, and get the status of a public company, which enables a business to operate with more public trust. So, who are the biggest operators in the investment banking market? Typically, investment banks are divided into two groups, bulge bracket and boutique firms. The bulge bracket presents the largest and most known brands in the industry. Typically, bulge bracket firms are large, full-service banks offering a wide range of different high-level financial services, and investment banking is only one part of their business. Boutique banks, on the other hand, are typically smaller, more specialized operators in the market. Usually, these boutique investment banks do not offer other financial services other than investment banking related. Bulge bracket banks are Goldman Sachs, JP Morgan Chase, Bank of America Merrill Lynch, Barclays, Citigroup, Credit Suisse, Deutsche Bank, Morgan Stanley, and UBS. There are a lot more banks with boutique status, and these operators are typically also known for their locality. To name a few relatively well-known boutiques names, Lazard, Evercore, Rothschild, and Guggenheim Partners deserves to be mentioned. At the moment, the future for investment banking looks bright and clear. Demand for these high-level bankers has been increasing, and the starting salaries for young bankers have skyrocketed in order to gather the interest of young potentials. In 2021, starting salaries in junior roles at investment banks typically are north of $100,000 per year in comparison to only $80,000 to $90,000 just a couple of years ago. The increased demand for investment banking services is a result of an increased amount of M&A and other corporate transactions. As the Fed and other central banks have been keeping up loose monetary policies, Markets around the world have been filled with cash that is spent on purchasing stocks from the public and non-public markets. Investment banks have been enabling this money flow to meet between investors and businesses. What do you think about investment banking? Have you worked in any investment bank, or would you like to? Comment below your thoughts on this video. If you want to support the channel, subscribe to it and like this video.